Welcome to HedgePoint's 2023 recap. My name is Alef Diaz, and I'm a wheat and macroeconomics specialist at HedgePoint. In this video, we will cover the three main events that impacted wheat prices this year and what lessons can we take for 2024. After a somewhat positive start of the year into the second half of February, wheat prices resumed a bearish trend that started in the second half of 2022, after prices reaching all-time highs in the first half of that year. This trend was caused mainly by three factors: a record crop in Russia, the world's top exporter, which led to very high exports by the country throughout the 22-23 marketing year. Also, the establishment of the grain corridor deal, which allowed Ukraine to export its grains via Odessa ports. And last but not least, the beginning of the interest rates hike cycle, which reduced investors' appetite for riskier assets, like agricultural commodities. The days that followed the third renewal of the grain corridor deal, May 17th, marked the lowest price levels seen in the first half of 2023, showing markets confidence that it would have easy access to Ukraine's grains. However, the following 2 months, June and July, saw an upside trend as prices went up around 25% since May's lows. Many factors were behind this bullish trend, like the increasing concerns regarding North American crops, US and Canada, and the first estimates for the Australian crop, which will have a much smaller output given the warmth and dryness seen in the country caused by the El Niño. But the main event behind these moves was the higher tension between Russia and Ukraine regarding the extension of the grain corridor deal, which led to the non-renewal of the deal in the 17th of July. After July's surge, wheat prices went through another correction that went on until the end of November. This move was generated mostly by speculators, who increased a lot their short positions during the second semester of the year, despite expectations that 23-24's world ending stocks would be the tightest since 14th-15th. Even though world stocks are tight, speculators' moves can be fundamentally justified. The production of 23-24 crops in the Northern Hemisphere were higher year on year, especially due to another huge crop in Russia, which continues to export record amounts month after month. Additionally, the headlines coming from the Black Sea are losing relevance, because Ukraine is losing its share in global markets due to the lower output, and it has been able to export this lower output using the Danube ports. And last but not least, the lower corn prices also weigh on wheat prices. What lessons from 2023 can be taken to 2024? Well, the great lesson is that tight world stocks don't necessarily mean high prices. As harvests in the Southern Hemisphere reach their final stages, market participants will turn their attention to demand behavior and conditions of the 24-25 crop in the Northern Hemisphere. But the flow from Russia remains key, should it keep its high exports at cheap prices, which will likely keep weighing on Chicago and other exchange prices. Developments in the Black Sea will likely keep losing relevance, as world markets are becoming less dependent on Ukraine's supplies. And last but not least, speculative funds positioning must be watched closely. During 2023, they exerted a bearish pressure on prices, but now their net sold positions is below the 5-year lows on both Chicago and Kansas contracts. Consequently, any bullish movement can be amplified should it trigger a short covering movement by these funds. Thanks for watching our wheat 2023 recap, and stay tuned for more updates and analysis.